The Southern Ontario housing market. It's a topic that's pretty much always on everyone's mind, and, for good reason. Today, we're going to cut through all the noise, dive into the hard data from early 2026, and figure out what is really going on. All right, let's jump right in.
So let's start with the million-dollar question, literally in some cases. Is now a good time to buy? It's the one thing that keeps potential buyers and sellers staring at the ceiling at night. Are you about to jump into the biggest financial decision of your life, or are you about to let a huge opportunity slip by?
Well, here's the bottom line right up front. It looks like the market is definitely leaning in the buyer's favor. And that's not just a gut feeling. We're talking more houses to choose from, more time to think, and, most importantly, way more power when you sit down at the negotiating table. Let's break down the numbers that are telling this story.
Okay, so how can we be so sure it's a buyer's market? Well, because the data doesn't lie. In this first section, we're going to dig into the key figures that show this clear shift, a shift that's putting buyers back in the driver's seat for the first time in a while.
The very first number that just jumps off the page is the price tag itself. Across the whole region, the average home price has actually dropped by a pretty significant 7.1% compared to this time last year. Now, in a market that's famous for its relentless upward climb, a drop like that, that's a really big deal.
So why are prices dropping? Well, it's pretty simple actually. Fewer people are buying. With a 6.3% dip in the number of home sales, there's just less competition out there. And less competition means less upward pressure on prices. That's what's giving today's buyers the leverage they need to negotiate a better deal.
All right, now let's put all the pieces together. You've got fewer sales happening, and you've got lower average prices. That's a really powerful 1-2 punch that completely tilts the balance of power from sellers over to buyers. It really is a fundamental shift in how this market is operating right now.
And this brings us to a super important metric, the sales to new listings ratio. The easiest way to think of it is like this. For every 100 new homes that get listed for sale, only about 36 of them are actually selling within the month. That means there's a whole lot more supply than there is demand, which, you guessed it, gives buyers a huge advantage.
But let's be real, Southern Ontario is a massive place. The market in downtown Toronto feels like a completely different universe from the market out in Oshawa. So let's zoom in a bit and see how this whole picture changes when we look at specific regions.
And wow, the differences are pretty stark. An average home in Vaughan, in York Region, is going to set you back about $1.23 million. Meanwhile, a similar home out in Oshawa, in Durham, is closer to $850,000. We're talking a nearly $400,000 difference. So yeah, where you decide to plant your roots has a massive impact on your budget.
But it's not just about location, right? The type of home you're looking for plays a huge part in all of this, too. Trust me, the market for a detached house is a completely different beast than the market for a condo apartment.
I mean, just look at this chart. It really says it all. You could basically buy 2 average condos for the price of 1 average detached house. That is a staggering difference, and it has a massive impact on what's actually affordable for the typical buyer out there.
So what's the deal with that huge price gap? It really just comes down to old-fashioned supply and demand. There are very few detached homes available for sale, so their prices are holding up pretty well. But on the flip side, there's kind of a flood of condos on the market, and all that inventory is pushing their prices down.
Okay, we've seen what's happening, but now it's time to ask the really big question, why is it happening? Let's zoom back out and take a look at the 3 major economic forces that are pulling and pushing on this entire market.
You can almost picture it like a giant game of tug-of-war. On one side of the rope, you've got these stubbornly high interest rates trying to pull demand down. But on the other side, you've got record population growth and a chronic housing shortage pulling it right back up. And it's this tension, this constant struggle, that's creating the really unique market we're in right now.
Let's start with those interest rates. This market analysis nails it. Higher borrowing costs continue to reduce purchasing power. I mean, it's just common sense, right? When it costs more to borrow money for a mortgage, people simply can't afford to buy as much house. That gives the buyers who are still in the market a lot more power. But high interest rates are really only half the story. At the exact same time, we're seeing record levels of immigration, which is creating this incredible demand for housing, especially starter homes and rentals. The problem is, we're just not building enough new homes to keep up with everyone who needs one. This push and pull is what's keeping the market from completely crashing.
So what does the future hold? The market's in a really delicate balance at the moment, but there are some big signs that things could start to change later this year. So let's pull out the crystal ball for a minute and see what might be coming down the pipe.
What we have right now is a pretty unique situation. You've got buyers who are being really cautious, and you have sellers who are finally willing to negotiate. This whole dynamic has created a giant pool of what we call pent-up demand. Basically, people who are just waiting on the sidelines for the perfect moment to jump back in.
And when I say a giant pool, I mean it. We're not talking about a small number of people here. We're talking about an estimated 100,000 plus potential buyers. That is an enormous amount of demand, just waiting to be unleashed on the market.
So, what's it going to take to get all those buyers off the sidelines? Well, economists are watching for a couple of key signals. First, lower interest rates from the Bank of Canada. And second, signs of a stronger economy overall. If both of those things happen later this year, it could be like opening the floodgates.
Which brings us to our final, and maybe most crucial question. The market is favorable for buyers right now, yes, but it's a very delicate balance. With over 100,000 people waiting on the sidelines, how long can this window of opportunity possibly stay open? And when it finally does close, just how fast is it going to slam shut?